Welcome back to another crypto video. Hello everyone, I hope you're doing awesome. Today we're going to check out Aave once again. We've still got V3 shortly on the horizon to launch, as we can see here, but I just want to look at some real bearish scenarios because we are clearly in a big bear market right now, and when you zoom out it doesn't look that bad, but when you look at the previous all-time high on the total market cap of crypto in 2018, use a Fibonacci extension, you can see maybe we have exhausted this particular bull market. Maybe this is the top right here, that 1.7 trillion. When everyone's screaming for 10 trillion, it just doesn't seem like realistic growth, because that would be a 20x from this particular level. So when you do get that Fibonacci swing high, you bring that down, that extension, you can see that we actually broke through that 3.618 at 1.6 trillion. And in a bull market, usually you're targeting at least the 1.6, the 2.2, but all that euphoria and greed took us all the way up to around 4.236 on that fib, which was 1.7 trillion. Now, it's safe to say, of course, we're overextended. Way too much greed, way too much euphoria, way too much thrill. And all this happened during the stimulus checks, the lockdowns of COVID. So maybe there was also some hyperinflation there due to excessive volume, excessive hype, greed. And I think it's safe to say that maybe we could be at the end of the bull market for now. But when you zoom out, it doesn't look bad, because you're looking at 464 billion market cap retrospectively. That was the prior all-time high, and now we're sitting at like 1.6 billion market cap, trillion, sorry. Now this is excluding Bitcoin's market cap, but it looks super good nonetheless. And you can see that we are just sort of trading across this diagonal support over here. We rolled over, and this is where we're finding that support once again. So if we do pull up that extension one more time, it's going to show us each level of resistance. So we haven't come down to the 2.272, and in a bull market, this is where you would expect to get those sort of double bottoms, sort of the retest. So you'd come retest this Fibonacci like so, and then maybe you'd assume a bounce to the upside because we're in that bull market. This is where we see those V-shaped recoveries. This is where we see those double bottoms play out. So that's one thing to consider, but it does look like we are in a bit of a bear market right now. Now let's assume we came down to 486 billion market cap on the altcoins. What we could do is we could bring up this all-time high, bring that down to where we'd anticipate the bottom to be for this particular cycle, and this is where we can see the new targets for the next bull run, which could be 2024, 2025, and this is where again we see realistic targets, because now you almost have to think a cycle ahead. When people are calling 100k for Bitcoin, it's not going to happen this cycle, it's going to happen next cycle. If people are calling 250k, it's not going to happen this cycle, it's going to happen next cycle. It's always like that. So it seems, you can see here now, if we were to hit the same target, if we were to lull for a while around these lows, let's say this is the next sort of, we come to about here, we will see something like that happen. That looks honestly realistic, rather than doing this. What would you rather? Would you rather scenario A or scenario B? Of course, you're going to want scenario B. That's much more steady growth. And then when you come down and correct again, you're looking at maybe a 1.7 trillion bear market floor. So this is very, very important. This is what I'm seeing. These Fibonacci's, they speak a lot of truth. You don't have to be a genius. It's just the way they work. So this is what could happen. Maybe in 2025, we're going to have a 5.4 trillion market cap like that. So that's just what I want to look at, guys. That's what I think could possibly happen. Maybe we're even going to come down, lose 50% of the total market cap that we do have, for the altcoin section, before we do something like this because of the Fibonacci extensions. So I'm going to keep this here and see if it does play out. Yep. Pretty fun. So let's hop into the Aave for today. Trading at $153, rank 63, market cap 2 billion, 24-hour trading volume 156 million. So we still have the Aave free. V3 on the way. It's not launched just yet. There's a lot of anticipation for this. You can quickly do some research on that in Google if you wish. And you know, the Aveonomics here, so the total supply of Aave is 16 million tokens. 30 mil Aave tokens will be redeemed by Lend tokens. 3 mil Aave tokens will be allocated to the Aave ecosystem preserve. So this is the tokenomics effectively of Aave, which is a really nice tokenomics here actually. And let's look at some of the pricing. So again, we can use those Fibonacci's to see what's going on. Maybe we are in the bear market now. Maybe we're just going to hold this low level. But you can look and assume that one day Aave is going to hit these bigger numbers: £572, £600, £700, £900. If we hit these big bull market targets, you're looking at £1,600, which is $2,000. And I think that's very possible to happen, especially with this particular project. So this is a great area to be loading up for the next few years. If you're not looking to rush, take profits too soon, now is a good time to actually get into these projects when they're really low cost, in retrospect to the previous bull market and the way the Fibonacci's extensions would have worked. You can see on the daily time frame, RSI's dropped down to about 40. We're losing a bit of volume here, but there's a lot of fear in the market again. So if we zoom in a little bit, you can see we lost this support at 117, and we need to retarget the 117 level. We're back under that 20-day moving average. Doesn't look too good. 4-hour time frame, it looks like we're just finding support, finding our feet, consolidating a little bit at this level. If we look at that hourly time frame as well, we were oversold on the relative strength index, and again we're consolidating again. So we don't know if we're going to see a movement to the upside or downside, but I think on this occasion it's more likely we're going to get a recovery and retest this £124 level right here in the short term. So maybe producing some sort of double bottom pattern there. I think that's quite likely. So 30-minute time frame again, we're just going to see a bit more noise in this symmetrical triangle that we're in at the moment. And I think it's really, again, important that we do hold this particular level. Otherwise, we're going to come down to lower support levels, such as £107 right over there. So it doesn't look too bullish. I must admit, guys, it doesn't look that bullish right now. And it could just be because we're in a long-term bull market, which maybe bear market, shall I say, which needs to be catalyzed by, you know, Bitcoin halving or something like that, or much bigger events. But to even have a bear market at these price levels, it's still very strong. So don't feel like you're late, because you're definitely not. You're early, and that's what's going on. We can see on the 30 days it's down 33%. On the 24 hours it's down 7%. And I think we just got to see if we can bounce at these levels and see what, you know, Bitcoin decides to do. If we look at Bit, you can see we had a huge $3,000 wipeout yesterday. But again, if we use that Fibonacci like we were just talking about from 2017, you can see, again, we're almost coming up to this 4.236 Fibonacci extension. Everyone is calling for unrealistic numbers like $200,000. I always knew it wasn't going to happen, and I told people it's not going to happen. So you can see here, price discovery only gave us another $4,000 of actual growth. And this was obviously where we had a big bearish divergence, and then we dropped again. So what you'd assume is going to happen is, for the next bull run, maybe if the bottom for Bitcoin would be, you know, 2017 all-time high, we can use this again to get more realistic price targets. So potentially the next cycle we can see $200,000. That could actually happen, or $130,000. It wasn't important. I know that for a fact. My God, the number has 666 in it. That wasn't important. I don't know why I'm getting calls from the devil. Right, so you can see these are much more realistic price levels. This time it wasn't going to happen, but for it to happen next time from these particular levels, you're looking at 473% increase. If we were to look at the bear market here to the peak of this cycle, 1,167% increase. So 11x versus a 5x. It looks much more realistic to assume that the returns per cycle, not only is the cycle going to lengthen, the bull cycle, but the returns also diminish. So I hope that educates you in some sense about these Fibonacci's and the way we are overextended at the moment in the bull market and why we couldn't achieve these bigger numbers like we thought we were going to. So if you like the channel, the content, and this realistic approach with no sensationalism, make sure you subscribe, guys. That'd be absolutely awesome. Hop into the Discord down below just here. That would also be awesome. Also become a patron for that one-on-one support. I very much welcome you to become this particular level just to support our journey. You're going to get one-on-one messaging. You receive this awesome ebook here, and also Discord premium access, which I think you'll love the channel, by the way. There's so many awesome people in here. So yeah, that's about everything on Aave, total market cap, Bitcoin price, and this particular cycle, which I think is pretty much exhausted for now. So guys, see you soon.